everyone, and warm welcome to everybody to today's webinar. Thank you so much for attending. Today is May 18th, 2016, and we are going to talk about strategies for different euro crosses. My name is Kiana Danielle. I'm the CEO of Investiva. Before we start, please let's do a mic check and make sure that everybody in the audience can hear me properly. Please can you type in a Y for yes if you can hear me, and a double Y for yes if you can see my screen at the moment. The screen shows Orbex logo with today's headline, Euro Crosses Forex Trading Strategies. And also I want to make sure that you can see my screen. Right now the screen says Euro Crosses Forex Trading. So please type in a double Y if you can see my screen, and we will go ahead. Thank you so much for your response, everybody. Awesome. So just so you know, today we're going to try to cover as many Euro crosses as possible. But basically we're going to focus on the major Euro crosses. So here is what I normally describe currency trading as if they are dancing in pairs. So we have Mr. Euro over here, and we're going to see how his dance moves are going to be against Miss Canada, Miss USA, Miss British Pound, and Miss Japan. And if we have time, we will go ahead and cover more current Euro crosses as well. On the agenda today, we are going to first do an economic overview for all of these currencies that we're going to do the analysis on. We're going to take a look at Europe, UK, Canada, US, Japan, and then we're going to take the fundamentals and take it to the platform, the charts, and do an analysis on euro pound, euro dollar, euro yen, and euro CAD. Does anybody has a preference on which currency pair we cover first? So we'll go ahead and start with that but we all obviously need to go and cover Europe's fundamentals anyway. So all right, we have a request for euro pound. So all right, awesome. So we're going to start with that, and then we'll take it from there. So just so you know, this is how I look like. This is the Investiva website. You probably have seen me on CNN, Wall Street Journal, and other TV, financial TV or radio. And we provide education, wealth management, financial planning for people who are looking to enrich their financial freedom. So without further ado, let's cover Euro's events. What is going on in Europe today? Well, right today actually, we had the CPI results of Europe, which came unchanged actually from last year at minus 0.2%. And another thing that affected Euro today was German 10-year bond auction. That also didn't change as much. So nothing was really going on in that term with Europe. But let's see how Europe has been doing in general. I'm going to take a look at our economic calendar. Here on Orbex.com. And what we do when we go to economic calendar, we can filter. Actually, we can also do this over here. So what we can do is doing the filter only for Europe. Right, so we go click on none. You can do it as I'm doing it at the same time, and I'm going to set my search to only, well, relatively important events that has been going on, and I want to know what has been going on throughout the month of May, so that, and what is going up, what is going to come up. So I'm going to set my date from 1st of May until end of May. Maybe I shall extend this to middle of June so that we have a broader knowledge of what is going to come up. And because we've already set this, we're going to see everything. So from May 2nd, well, we had ECB, European Central Bank Mario Draghi, also known as Super Mario, made a speech. He was pretty pessimistic about the economy, and he basically said that what is going on with the inflation is actually sort of a he first of all he's pretty he's pretty angry with Germans and how they are reacting to the European situation, and he also says that the low interest rates that right now they have in Europe are only a symptom and not a cause of underlying problems across major economies in the zone, and but unfortunately there is no alternative to low interest rates at this time. So with that, if needed, they might do something about the economy in terms of inflation and price stability. So obviously, well, we had a bunch of these ECB meetings this month. They have this new non-monetary policy ECB meeting, which also has been shaking the market, is creating volatility. But the main data that came out that really put pressure on Europe was the GDP. So it was basically adding insult to injury after Mario Draghi's comments, and it came lower than expected and lower than last year on a quarterly basis. Well, these are the preliminary, so these are the expectations for it. And so the expectation is also revised down to 0.5% on a quarterly basis. And so that was last week on May 13th, Friday. Well, it was a very unlucky day for Euro, let's put it that way. And then again, we had the trade balance for March. Well, this was a little bit mixed because two different indices gave us two different, well, one of them came in better than expected, one of them came in lower than expected, so that was pretty mixed. But then again, the price index wasn't really changed today. So basically from what we're seeing on what has been happening with European economy, and based on what people have been saying, the authorities have been saying, we noticed that, well, there is a downward pressure again on Euro coming up. So and we obviously have seen it against across major crosses as well. So coming up with ECB, well, tomorrow there's another report of the ECB monitoring meeting minutes that could create a volatility. We are going to talk about how to trade this today. So for speculators and short-term traders, this can be an opportunity to get in. For long-term traders, the things that you want to keep an eye on are more in terms of data. So we have the consumer price index coming out end of May, last day of May on a Tuesday, and then, well, the beginning of June, we have all these actual GDP prices coming up. So with this, I mean, fundamentally, we just now know that Euro is in a bit of a trouble and probably is not going to go away. Another thing you want to keep in mind is that, well, the UK is thinking about exiting the Eurozone, and depending on what is going to come up from that, Euro is going to face even more trouble. So with that, because we're going to cover Euro Pound at the beginning, let's take a look at the UK economic overview and the fundamentals. So we're going to go back to our filtering system over here and check United Kingdom over here with the same time frame. So looking at pound, well, the UK data started the month basically in red up until the second week on May 10th, that they finally had something in green. But the most important things, the most important data have been coming out in red. And so just giving you a little bit of a overview of what the Bank of England is up to. So they released their monetary policy along with their meeting minutes and inflation report. And in addition, the Bank of England's Governor, Mark Carney, stepped under the spotlight and delivered a press conference as well. And so the number one takeaway from that was that all of the members voted against any policy changes. So you can see over here, so there are 9 members, and all 9 members voted for policies to remain unchanged. And so the group also decided to keep interest rates steady at 0.5%, as you can see over here, and the lowest since March 2009. And how I know is because you can take a look at the chart. It's not really showing it right now. So this move did surprise analysts who expected the opposition to decision. And so although the Bank of England was widely expected to keep the policy steady, some speculated that at least 1 or 2 would vote for a rate cut because of all these other disappointments that we saw at the beginning of the month. But, well, that didn't happen. And the second takeaway was, well, lower growth and inflation outlook. And, the members of Bank of England declared that growth has slowed in Q1 of 2016 and is expected to go even lower in Q2. And they cut their Q2 projections to 0.3% from its 0.5%. And so the 0.5% estimates in February, and it's basically downgraded. Let's actually take a look at over here. Every possible upcoming data for Q2, and the central bank also pointed to the impact of a potential Brexit that we covered in details in the previous webinar with Orbex, and said that it has complicated the relationship between the economic indicators and the underlying economic momentum. So that's why right now we're seeing a little bit of weird market movements when it comes to pound crosses, well, including euro pound. And as for inflation, BOE noted that it won't likely reach its 2% target until 2018, and low energy and food prices are the main drags, and they're expected probably to fade over the next year. And meanwhile, their core inflation measure that doesn't include volatile items like oil and food prices is also expected to remain lower because of the global price pressures and the semi-strong pound, right? And so when it comes to, about like 6 months ago, it wasn't even exactly 6 months, maybe like 9 months ago, when we were talking about a Fed rate hike in the U.S., we're also talking about a possibility of a Bank of England rate hike. Then they downgraded that possibility to actually a rate cut, and so that is when the pound really dropped versus the dollar. But now, so Bank of England again came out and said that they're still likely to raise its rates, and it's more likely, basically. So this is basically what they're saying. They're not saying that we're going to hike the rates. They're saying that the possibility that a rate hike is higher than a rate cut. And they say, well, basically I'm quoting what they say, that they said that it's more likely than not that bank rate will need to be higher by the end of the forecast period than at present. And also noted that if they go with the rate hike, that would be gradual. That's what the Fed also said it, and we are seeing that how it's actually panning out as they promised. So that is one thing that we can expect from Bank of England, and that is probably behind the reasons why today we saw some hikes in British pound, well, along with the data that came out. And another takeaway from the Bank of England Thursday, which was last week, it was that we found out that its governor Carney is really against Brexit, and so he's been saying that he's been defending the Bank of England role in political decisions, and has said that it's within the central bank's mandate to present its risk of such an event. And so we only have until June 23rd. So we're almost a month away from the referendum vote. And Carney has warned that a vote to leave the European Union will materially change the outlook for output and inflation. And he has been warning that a Brexit could cause slower growth, notable rise in inflation, a decline in employment, a fall in value of the pound. So of course, like, these are all things that we covered also during our webinar. So these are the things that you want to keep in mind. So with in terms of euro pound crosses, if a Brexit happens and a British pound does get weaker, that would mean that the euro pound will go higher. So we'll cover that in a minute. And so with that, we've already covered two main fundamentals to get us ready to do a technical analysis on pound yen. All right, so this is my platform of pound yen. I might actually go ahead and change the platform color so it's easier for you to see. All right, everybody can see my chart. And by the way, if you have any questions, please definitely go ahead and ask me. We do have a Q&A session submitted for the rest of it for 5 minutes at the end of the webinar if we have time. So let's do a technical analysis for pound yen. So this is the monthly chart of pound. I'm sorry, euro pound, and let's actually go all the way back. This is the blank, completely naked chart for euro pound, and we can see that it started back in 1996 when euro came to play, and it started at around here, 0.84, and we saw the dip, we saw the highs. The highest euro pound has ever been is 0.97. It's never reached parity, right? And right now, as you can see over here, the pound is actually trading within a downward channel, right over here. And then if we additionally go ahead and add an Ichimoku cloud, we'll notice that the pair is actually crossed below the Ichimoku cloud as well. So that is, well, the moment it crossed below the Ichimoku cloud, obviously that was a major a bearish signal, and that was back in, well, 2013. But well, right now it remains below the Ichimoku cloud, so we still can see the downward pressure to kind of maintain before we see any sort of well, major correction of pound of euro pound, right? So further, to see what are the levels that we should be looking for. So we have a massive downtrend over here from back in 2013 to 2015, and then we had an uptrend over here, euro pound, and that is well, that is when what happened when well, the uptrend started beginning of 2016 or like December 2015, and the reason for that is, does anybody remember? It was China, and its super gloomy data that scared the S out all the traders, and euro actually become a safe haven. And that is when, as I just said, the Bank of England lowered the expectations of a rate hike, and they were actually signaling for a rate hike, and they were actually signaling a rate cut. And that is why British pound, which is quoted second, which means the weaker British pound gets, the higher euro pound goes. So that's exactly what happened. Euro became a safe haven, and pound was devaluating. And that is why we had 4 consecutive months of upward movements within within this pair. So with this, if you want to, the next step, basically technical analysis, is finding your pivot levels, right? So right now we know that the pair is kind of ranging within a channel. Actually, I should probably go ahead and make this a little bit wider if possible, or I'll just redo it all over again. So we're trying to, yeah. So it actually went a little bit below the range. It tested below the range, right? And went back up. But I mean, well, we can see basically this is our support level within the range, and this is the resistance level, and it kind of zigzagging. It has been zigzagging within the range. It did break below it. It did even confirm it below it, but then it was not able to maintain and went back up. And right now, one thing that is happening is that, well, if it's not able to go further higher and actually reach this resistance level, well, that will change the direction of the channel and make the slope a little bit steeper. But well, we don't still have a confirmation. It kind of looks like we have a hammer over here, and it looks like a reversal. So with that, we're going to use Fibonacci retracement levels to see what is going on over here. Is this a correction? Is this a temporary? So first, we're going to do the Fibonacci level for the most recent downtrend, and we notice that, well, oh wow, look at this, the 50% Fibonacci level is exactly where this pair started the correction. So this is one of our key, well, pivot and / support levels. I'm going to round this up to 0.79, right? And now it's approaching 0.38. So this is our second support pivot level, right? And so normally we know that the Fibonacci, the 50% Fibonacci level is incredibly powerful, and the fact that it tested above it, well, it went all the way up to 61% Fibonacci level, but then changed directions, kind of points to the fact that it might actually be a reversal, and this could have been just a correction, and it's going to go back down and continue the range within the channel. And then if we use the same Fibonacci retracements, but this time for this newer uptrend, right? We want to see what we can get from this. I would actually go ahead and, well, I'm going to add the 23%, and I'm going to change this. Now that we know what has been going on a long-term point of view, I'm going to change my chart into the daily chart and the 6-month, right? So this is the most recent, oh my God, look at that. This is so delicious. So this is the most recent development in euro pound, and just to make, so this is the test, the shadow of the candle that we saw on the monthly chart. Here is a little bit more zoomed in so we can readjust our Fibonacci, and we can see that, well, the 38% Fibonacci level kind of, this 30, so the uptrend 38% Fibonacci kind of falls at the same exact zone of the downtrend Fibonacci. So this makes this level 0.7690. So this level over here, a very, very strong support level. But look what happened on the daily chart. It just broke below the Ichimoku cloud. And the moment that the a pair breaks below an Ichimoku cloud, especially an uptrend Ichimoku cloud, that is a strong indication of a shift. So with this, and with the fact that we already said that on the fundamental side, Eurozone was looking gloomy, and pound is actually getting could be getting stronger because there are hopes for a rate hike rather than a rate cut, and the fact that Mark Carney is completely against a Brexit, we can understand why euro pound is actually falling, right? So with that, we can go ahead. Right now, actually, I do believe that this could be a significant bearish signal, and if you are going to do that, and our targets would, well, respectively be the 50% Fibonacci level right over here. So I'm showing our support levels with purple color, and wow, look, the 61% on the uptrend and the 23% Fibonacci on the downtrend are also in well, same zone. So with that, I'm going to take the middle of the zone and set it. I mean, if you want to do your risk management and go with a less risky target, I would go with the higher support and target so that you can get out before the markets change their decision. So with that, this could be our bearish scenario with euro pound. And alternatively, this, again, remember that oftentimes, well, markets can completely change, and we do have some upcoming data that could change our forecast. If the pair suddenly decides to go nuts and breaks above the Ichimoku cloud, that will change our scenario, and the first alternative target for a bullish scenario would be right over here at 61% Fibonacci. So this would be our resistance. Also, this can be set as our stop loss level, right? But if you want to use this as a stop loss level, so this is how we're going to do with the strategy in order to minimize our risk. Okay, so this is very important. Please take notes, all right? So if we are looking to get into a bearish position and we are setting a limit order or take profit order, it's better, and we've already set our support levels, right? It's best to set our target a little bit above the support level. The reason why is that there are so many traders who understand technical analysis, and they're probably also targeting this exact level. And sometimes that is why sometimes the pair changes direction before reaching exact support level, and you basically miss out on the opportunity. So it's always safe to set your limit a little bit higher than the support level and set your stop loss a little bit looser than the resistance level. All right, so this was for a bearish scenario. On the other hand, if you are going to get into a bullish position, all right, it's best, so you're again going to use these support and resistance levels as your stop loss and take profit levels, right? It's best to now this time make it completely reverse. So we're going to set our target a little bit tighter than the actual resistance level and have our stop loss a little bit looser, right? Because sometimes it just kicks the support level and goes down and then it changes direction. So you don't want to get out of your trade prematurely, and that's the reason why we do that, all right? Okay, so that's that for euro pound strategy on a daily chart, all right? And if you're going to get a little bit shorter term, for shorter term traders, I'm not going to go to 5 minutes chart because that is just not my style, but for our oh, look at that. Today was completely nuts. So it did break below the HMO cloud on the 4-hour chart as well. And well, here, because we have zoomed in, we can see a little bit more of the cycles. And you can see that, well, yeah, targeting a little bit above the support level actually makes more sense, because when you look at it closely, you can see that, well, it has been just testing this level. It might not quite reach this level. So if you already are in a euro pound trade, you might as well, in a short-term trade, you might as well get out now because the next stop is our pivot level. Long-term traders is a different story, right? We're talking about short-term trades at the moment. And so the pivot zone remains the same way over here. And if you're not in a bearish position at the moment and you want to, well, get into a short-term trade later on, you might want to wait for a break below 0.77, all right, because that would open doors to further drops to 0.75. Right now, it's for a short-term trader, it's probably a little bit too late to get in because we've already had massive drops today, and the next set of data coming out is well, tomorrow, right? Tomorrow we have UK's retail sales coming out, and if it does come out for speculators, again, I'm talking about for speculators, if UK retail sales come out better than expected, we can expect the euro pound to drop further. And then we also have the ECB monetary policy meeting counts tomorrow, and if the meeting minutes are again more dovish and more gloomy, again we can see that would be a further backup to our current bearish bearish outlook for this pair. All right, any questions with this? No, great. So we're going to go to our next euro cross. Does anybody have a preference on what we're going to cover next? I'm actually going to go ahead and cover euro dollar because, well, we have a bunch of stuff coming out today, right? So today the meeting minutes, let me see, did it come out yet? It's going to come out right after this webinar, the minutes. So that's, we're probably going to see a bunch of volatility. We already had the crude oil inventories, which came out better than higher. And so with that, it actually just came out. And so what that says is that, well, oil today was a big topic, and as you might know, oil and the U.S. dollar have a indirect relationship. So the higher oil prices, the lower U.S. dollar prices, and but that is not as fixed as, let's say, oil versus Canadian dollar, but still. Today we got the change in the number of barrels of crude oil held in inventory by the commercial firms in the past week, and that number rose to 1.3 million. And so with that, we actually want to go and see what has been happening with oil. So U.S. dollar, we're going to expect a bunch of volatility. Let's also take a look at the economic calendar, right? Hold on one second. Okay, so with the economic calendar, we are going to again show the filters and see what's going on in the U.S. I'm going to unselect UK, and we are going to select the U.S. for the same time frame. All right, so beginning of May, we had some red stuff, one green data coming out. This was pretty bad, which slammed the U.S. dollar, but then it kind of picked up. May the 4th be with you. On May 4th, we had non-farm productivity, which came better than expected, better than the time before that. We had the PMI, which again came in green, and then jobless claims, better than before, but then, okay, so it's been going up and down. We've had a bunch of mixed. So this was when dollar suddenly got really slammed back in May 6th. And now if we fast forward, retail sales started going up, which is pretty good. Again, so on May 13th, that everything basically went down. A lot of data came out and created a ton of volatility. So with the U.S., we were more of a mixed signal, but the traders really focused on the positive, and that's how we saw the euro dollar really changing directions after a premature volatility. All right, and then so after that, most of the outcomes have been coming out in green. So US dollar has been strengthening in the past week. All right, so today we are going to have FOMC minutes report, and that is going to come out exactly in 20 minutes. So let's go and take a look and see how the euro dollar is reacting to this market volatility. So again, we're going to start with the monthly chart, right? So again, it's kind of similar to what we saw with euro pound on the monthly chart. We also have a downward channel going on. This is a little bit more within the lines, so it's been like really zigzagging between these two support and resistance levels. Adding the Ichimoku cloud, we realize that the pair is still remaining below the Ichimoku cloud in the monthly chart. And furthermore, adding Fibonacci to the most recent downtrend, which started back in 2014, we realize that, well, this 23% Fibonacci level has been acting as quite a resistance, right? But it's a little bit, well, this is a little bit, I think I need to readjust this. So this Fibonacci level, as we can see, sometimes you need to look at, so this is like really not working out for what the actual support resistance level has been, because if you look at this, we have covered this before, right? The pair, just looking at this recent consolidation that has been going on, has been trading within a rectangle. And I think last week I did cover that a break, we were waiting for a break, I think it was last month, we were waiting for a break above the box or the rectangle. It didn't, and that is when we entered a bearish position because it was not able to break above the consolidation, and that is why we're predicting that we're going to see more range trading. And with the recent developments in euro, again, we have more downward pressure on euro and more upward pressure on the US dollar, and with that we can expect this pair to move a little bit further. So this is basically the cycle that we are waiting for the pair to complete. And normally currencies will move in cycles, right? And the lower that euro dollar has ever been has been 0.84, and a very strong support level which originated back in 1997, and let me just use this as an indicator. So it originated back in 1997. It tested it back again over here, and now it's basically stuck in this exact same level 20 years after, which is pretty interesting and makes it incredibly important and strong. And the more times a level is tested, well, the stronger it gets, you see. So this time is actually a little bit lower, so it's 105 basically, right? So this is our main support level at the moment. We've been looking for the pair to break below this, right? And if it does, that would actually be pretty critical for euro pound. A lot of analysts have been shouting and yelling about euro dollar, going back to parity. It hasn't happened in such a long time, since 2003. So if a Brexit does happen, if something catastrophic goes down in Eurozone, that is when we could expect the pair to reach parity. But so the interesting thing that has been going on and kind of has lowered the expectations for parity is that the recent investor behavior as when it comes to China. And whenever we're having a bad Chinese data, euro becomes a safe haven. So that is what has basically kept euro dollar from breaking below 105. All right. So this is a long term. So if China comes out and gives us incredibly amazing economic outlook in the next 6 months, we might see the pair to actually break above, to break below the box, because that will take the safe haven status from the euro, and but at the same time, so yeah, and that the U.S. dollar has direct effect with China, with Chinese data as well, as and when China is printing out better than expected data, the U.S. dollar gets stronger. That would push the euro dollar lower as well. So you want to keep an eye on China as well when you're trading euro dollar. So this is the monthly chart. This is the big picture trading analysis. And so let's take a look at a shorter term time frame and see where our pivot levels and support levels really sit at, right? So here, as you can see, the pair has been just zigzagging above and beyond, back and forth between this box, and right now is basically now retouching back the Ichimoku cloud on the daily chart, right? And I do want to take a look at, we basically want to set the pivot point, and because it has been ranging, normally in a consolidation mode you want to go with the middle of the consolidation and see which level the pair has been testing the most and set that as your first pivot level, right? So look at this. This is when the range started, and the first the first, let me use this. So the first place, the first support that the pair tested was over here. It tested it again over here, again here, here. So you have to be a little bit more microscopic when it comes to range trading. It's not as obvious as it is when the market is trending. Unfortunately, we can't use Fibonacci for that. So you just have to go and connect the dots, connect the support levels, and see where it falls down. And you can see, yep, so this 111, and if you go with the median of it, just to round it up, it's not obviously always exact, but you can see that the pair has tested this a bunch of times. So here and here, then again here and here, it was forming a triple top over here, and it acted as a neckline. And yes, of course, after it broke below the triple top, we had a downside movement. And so now we have this as a obviously as a pivot level, and it kind of falls very nicely with the bottom line of Ichimoku cloud. So with this, if you're still unsure as to what direction euro dollar is going to take, one thing that you can do is to wait for a break below the Ichimoku cloud and below this pivot level, and then get into a bearish position targeting a little bit above 105, right? So you don't want to target exactly 105. If you are in a bearish position, you want to tighten it up to manage your risk a little bit better, right? And alternatively, if suddenly all this changes and the pair is finally able to break above 115, 116 around here. So this is our resistance zone, right, between 115 and 116. If you're setting a stop loss, you want to go a little bit looser. If you're setting a bullish target, you want to get a little bit tighter. So somewhere between 116 and 115 is where the pair has not basically been able to break above. The definite point has been 1.1712. So if it suddenly breaks above this level, that is when, well, that is a direct and a very strong indication of a reversal, and we could expect the pair to actually rise all the way up to 122. So that would be our bullish scenario, right? But at the moment, as I said before, so with the fundamentals and the technical projections, if you put two and two together, right now the possibility of a bearish, of more falls with the pair is stronger. Another backup for that, actually, I just realized this. Let's zoom in a little bit more on the 4-hour chart. All right, so you can see that the pair was moving inside an upward channel, and then it actually broke below it. Right about today. Not today, it's actually yesterday. Is everybody still with me? Okay, I just heard an interesting sound. So yeah, so that was also another bearish signal for us, and it's also right now testing below the 23% Fibonacci level. On the 4-hour chart, it still remains below the Ichimoku cloud. The forecast for Ichimoku cloud is in the red. So I mean, at least we can expect the pair to reach, if you want to play it safe on a short-term time frame, we could expect the pair to reach this support level, right, at 111.15. And if you want to play it very safe, you can go to 112 so that you can get out with profit and then wait for a different signal. But it was moving in an upward channel before, but it kind of reversed from its peak right over here. Right, so that was our scenario and strategy for euro dollar. Next, another, I would definitely like to cover a different one last euro cross, euro yen. And with that, we have to take a look at what is going on with euro. So we don't have much time, so I'm going to just quickly cover what is going on with yen, with Japanese yen. So putting it all together with all the data that has been coming out, well, they have been having weaker consumer spending. That was a drag on their Q4 2015 GDP growth, both on a quarterly and yearly readings. And it looks like consumer spending is also, it's going to be a drag again. So if you're planning to trade, actually, let's take a look. They just had their GDP reading out, so let's take a look at that. So again, we're going to go back to our economic calendar. We're going to show the filters. We're going to untick US dollar, and we are going to tick Japan and see what has been going on with the Japanese yen. So recently, okay, so their GDP came out better than expected. So that would make, right, the Japanese yen obviously stronger. And but their consumer spending, if I can only find that, it's not showing up over here. But the consumer spending, well, has been getting weaker. So that puts, well, the Japanese in a little bit of a mixed phase. And so their manufacturing and services PMI readings are also pointing to a likely poor start for Q2, which is, well, start of May. And with that, well, we're having a little bit of a pressure on Japanese yen, which could be better for the Japanese economy in total because they do not like a stronger Japanese yen to begin with, right? So with that, so again, we had a little bit of a, hold on one second, let's bring up we'll go ahead and do a technical analysis on euro yen. As we can see here, again, we're going to start with the monthly chart. It's a little bit different than what we saw in euro pound and euro dollar, right? So it started out all the way down at 87. So 1 euro is 87 yen, right? and the maximum it has gone up to is 168. So it has doubled. It's like 200% correction versus the Japanese yen, right? So there is no specific. So we had a massive uptrend over here, then the massive downfall around 2008. The market crashed and it went all the way down, very close to what it was before. You can see that it didn't actually quite test the lowest point it has been before when it went down here. But right now, it kind of looks like it's beginning to form a new cycle. So Fibonacci, well, there are no channels over here, but I'm going to first add an Ichimoku cloud because we like Ichimoku. And we'll realize, oh, well, look at this. It's actually just going inside the cloud. Consolidation zone, a break below it will confirm a new cycle appearing in the euro-yen. Right, and with that, so we want to know our pivot levels and support and resistance levels. We're going to use Fibonacci. We're going to add the 23% over here, right? And so right now is actually basically testing exactly the 50% Fibonacci level, which falls inside the Ichimoku cloud, and it's our pivot point at the moment, right? And then we have the support at 61% Fibonacci at around 115. Right? And a confirmation of a break below the Ichimoku cloud will set our target towards the 61% Fibonacci, and then the next target would be, well, the place, this low that the pair tested back in 2011 at around 107. Right, so this is the monthly chart with that. So for this scenario, again, euro-yen is a little bit less than a obvious bearish signal at the moment because it's inside the Ichimoku cloud. We are seeing a little bit of a upward movement. That is because Japanese yen is getting weaker, right? So it's a little bit more, as I said, strong of a signal for bearish movement. However, when we go down on a long term, right, however, when we zoom in to the monthly chart, daily chart, we can see that it actually is, well, trading right along a downward moving Ichimoku cloud, which is also a downward channel. So in a long term, we need to wait and see if it breaks below the pivot level. Otherwise, if it's not able to do that, it might just continue this range within this downward channel and within these two pivot zones. So between 128 and 121 would be our target points, right? So that is one way of trading the euro-yen on a daily format. And finally, if we zoom back in to the daily chart, to the 4-hour chart, we can see that, well, the Ichimoku cloud is actually like really flattening out. It's now testing above the Ichimoku cloud. So really, it gives us a mixed signal when it comes to euro-yen. Yep, thank you so much. Let's see what we have here. I didn't welcome the people who just joined us. Let's do a recap of what we did today. So today we did cover, well, the euro crosses. Unfortunately, we didn't get to cover euro CAD, but we did cover euro pound, euro dollar, and euro yen. This was me. If you want to learn more about this, definitely follow me on Twitter at Kano Danielle or at investdiva.com. I'm also on Facebook, InvestDiva, and Kano Danielle as well. And if you're new to Forex, definitely buy my book. It's great for beginners, and it really breaks down everything that you need to know about Forex. Also, this video is going to be recorded, so for those of you who just joined us, you can definitely go ahead and see this Orbix webinar later on. The article on euro crosses on investdiva.com, and I've basically written down, not as specific as we went in today, but you can see the charts and the forecasts, and also the one for euro CAD over here up on investdiva.com. If you need our updates, definitely sign up. If you go to the home page, you can click on sign up, and sign up for our newsletter. We would love to have you. We also have cool videos. All right. Everybody, thank you so much for joining us today. If you have any questions, contact orbx.com, info@orbx.com. If you have any suggestions, any topics that you want us to cover, definitely go ahead and shoot an email to info@orbx.com. They do listen to what you say. And yep, have a great day. The FOMC meeting minutes are going to come out any minute, so take an eye on that if you're a short-term trader, and invest responsibly. I'll see you next week.